Check, please.
Welcome back to Everything Money. Big news today. That gaming company that all of you love, Activision Blizzard, was bought by Microsoft, Paul. $68.7 billion, Paul. It's got me reeling. The day trading people are freaking out. In this video, we're going to go over the financials for both companies. We'll use our software to show you the numbers behind why Microsoft bought this, Paul's thoughts on acquisitions, and if you should maybe buy or avoid either of these companies moving forward. Mo will show you the day trading charts that are going bonkers this morning. We'll get all of this and more. I bring you Paul Gabriel.
Thank you, Seth. Guys, follow us on Instagram. Everything Money Investing is our new Instagram account. It is going crazy. It is probably a bigger account than Activision Blizzard and Microsoft deal together.
Combined.
And then also follow us personally. So this deal was just announced today. It's an all-cash deal. So for those of you who watch our channel on a regular basis, I discuss how you can do 5 things with free cash flow. And one of them is making acquisitions. And Microsoft is using a big check to buy this company. Now, if you know, Activision Blizzard has had some scandals lately because there was some improper behavior at the company, and the CEO wasn't being too strict about it, and all these other things were happening.
You've gotten handsy with me in the past, Paul, and I've just let it slide.
But that's why I had you sign a disclaimer saying you would never sue me for anything.
So this is a huge acquisition for Microsoft. In fact, they're looking.
It's their biggest one ever.
This will make them the 3rd largest gaming company in the world.
Look at it. They have Xbox, right? And just like streaming is a very big, I just perceive the gaming industry to become very, very competitive. So they're buying a plethora here of Call of Duty. That's Activision.
Yep, World of Warcraft, Candy Crush.
So they're sitting there saying, listen, we're going to become this dominant player in the gaming world. So let's pull up our software. Guys, this is our Everything Money software. 8 Pillars tool, Activision. So Activision Blizzard right here, guys. So let's see here. So as of before this morning, before the jump, we're at $50.85 billion. And this is a $68 billion acquisition. So the stock is up 30, is going to be up 30% this morning, at least. So let's just go right to the 5 pillars here. First pillar, we want the 5-year PE to be under 22.5. It's 31 before the jump. So if it goes 30% higher this morning, this is going to be at 40, okay? Pillar number 2, we want the 5-year return on invested capital to be greater than 9%. My guess is that it is because software companies tend to have a high return on invested capital, and it is 9.7. I actually thought it would have been higher, but this is fine. No dividend, but a very stable cash flow. As you can see, in the last 5 years, they've averaged $2 billion a year, but last year they did 2.8. So stable cash flow. So far, 1X and 1 check. Pillar number 2. Pillar number 3, we want revenue growth. So we go to the income statement and look at the revenue. I mean, guys, look at this revenue growth. It was pretty stagnant the first 5 years of the decade, but then we went from $7 billion to $9 billion. So again, not a big jump, but you know, I got to think at some point with this metaverse and everything that's going on, these software businesses are people are going to want to stay home and play these video games in this meta world, this 3D world of virtual reality and all that stuff. So a check here.
Pillar number 4 is profit growth, Paul.
So we scroll down a little bit to the net income line. 5 years ago, 1.1 billion. Last year, 2.64. Check mark there. Now, pillar number 5. Now, it doesn't matter anymore about pillar number 5, which is shares outstanding, because the company's probably going to be bought by Microsoft. But what we typically want to do is we want to find companies whose shares outstanding are staying the same or decreasing. If a company has 10 shares outstanding and you own 1, you own 10% of the business. They buy back 2 shares. You now still own your 1 share. Now it's out of 8. So you now own 12.5% of the business instead of 10%. The company has rewarded you for being a shareholder by saying, hey, we're going to use our cash to buy back shares so that you own more of the business. So we want to see that. So we scroll all the way to the bottom of our income statement on our software, and we go back to the 6th year because it's the beginning of the 5th year, 742 million to 778. So they've actually been increasing slowly every single year the number of shares outstanding. But look back 10 years ago, they had 1.1 billion. Now, I don't know if they sold off a division or what caused that big drop, but the bottom line is it's still an X. Pillar number 6. Seth, we talk about debt all the time. Can you talk to me about debt here real quick for everybody while I
Well, of course, you know, we're going to look at the total long-term liabilities divided by 5-year free cash flow. We want this number under 5. And in general, all that nonsense means we'd like to invest in companies that aren't in heavy debt. If there's some sort of recession or regression in sales, we want to make sure the company can survive this process.
Yeah, because the debt is owed no matter what the company is doing. And in a lot of companies, if certain debt levels are hit to the bad side, the debt holders, usually banks, can call those loans out and say, you owe us right now. So imagine recession hits, your revenue falls 20 or 30%, and then the bank says to you, you owe us your $2 billion note right now. That's going to be hard to pay. So back to our main page here. We take the 5-year average free cash flow number of $2 billion, we multiply it by 5. So we want $10 billion or less in long-term liabilities. So very easy, guys. We go to the balance sheet, we scroll all the way down, and total liabilities is $5 billion, so half the number. So that's great, okay? Pillar number 7 and 8 have to do with free cash flow. We go to the cash flow statement. Now, guys, free cash flow, like we were talking about with Microsoft, free cash flow is cash from operations less your capital expenditures, and you can do one of 5 things with it. You can pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back in yourself. So to make life easy, we added this line of free cash flow to our software. And 5 years ago, they did 1.79 billion. Last year, 2.81. That's a check mark. And for our final metric, we take the 5-year average free cash flow, we multiply it by 20 for a starting market cap for the business. This is not set in stone. It doesn't mean if the market cap is less than this, you automatically buy it, which is a starting point. But 20 times $2 billion is $40 billion. And it's being acquired for $65 billion.
68 and a half.
68 billion.
Yeah.
So according to my numbers, Microsoft is overpaying. Now, are they really overpaying? I don't know. So what's the play on this deal?
You know, Mo was saying on his morning show at 9 a.m. Eastern, he was saying they're buying this company at $95 per share, which is funny because after trading now, it's fallen to 85. So when this...
What does that mean? When it falls, when it's supposed to be $95 per share.
You tell me, because I'm wondering, can I buy the day at 84 and then they pay me 95 here in a week?
If you believe the deal's going to happen, then yes, that's how you'd make money.
Because this is not set in stone, of course.
No, because the government can come out and say, you know what, we don't really like this acquisition. It's anti-competitive, et cetera. It's monopolistic. There's a million reasons the deal could not happen.
So give me your thoughts on this, because basically we do this video 1,000 times. You try to find the market cap of a company like we're buying the whole thing. And sure enough, Microsoft is. So what are your thoughts on Microsoft? You have thoughts on companies making acquisition. We can misread acquisitions in terms of increasing revenue. And so what are your thoughts on Microsoft buying this?
My guess is they see a lot of ways of saving expenses on this deal. So what we created was that stock analyzer tool, right, Seth?
Of course.
So what we can do is we can go to the stock analyzer tool and see, hey, maybe the profit margin of Activision Blizzard right now,
30% or something?
Yeah, 30%. So maybe Microsoft says, you know what? We could probably make 36% because we can cut a lot of costs out. We can probably merge some developers together. So let's go do the stock analyzer tool and see if it makes sense from Microsoft's perspective. But you guys, this has been very popular because our users who subscribe to our software can use the stock analyzer tool to determine the price to pay for the company, because every investment is the present value of all future cash flows. And we don't know the future, so we have to make assumptions about that. So you would use this to use your assumptions to determine exactly what price to pay based on those assumptions. So let's sit there and say, I have a hard time believing Activision will not be around for 10 years. So revenue growth. Let's be conservative and say it's 3%, 4%, and 5%. But let's take their profit margin. In the last 10 years, it's averaged 20.7. Let's take it to 25, 27, and 29%. Free cash flow, let's take it to 27, 29, and 31%. And let's say they say, okay, you know what? We're going to dominate 15, 17, and 19 multiple, and we just need to get a 10% return on our money. This is not what we do. We'd want 12.5% return, because if you're investing in the market, an ETF will get you 9 or 10%. So if you want to buy an individual stock, get that margin of safety, get 12.5%, because you can't change the price you pay for a company. So be conservative start. That way you can get a better deal on the company. And your job is to find 20 or 30 companies out of 10,000 that fit your criteria. But we're looking at this from Microsoft's perspective. Hit the analyze button. And you know what? I still think, listen, from a value perspective, it doesn't make sense. We have a low 40s to upper 60s for price per share. I don't know if it makes any sense here. However, Microsoft has so much cash. Let's skip to Microsoft and see how much cash they have sitting around.
I was going to say, how much of this do you overpay for just simply getting rid of some of your competition? Is that a thing that goes through your mind?
Well, that's the anti-competitive thing they want to do. But to me, it's more about they're buying. To me, it's more about Microsoft is buying a group of software because the console, Xbox and PlayStation, I have a feeling those actual consoles are going away. At some point in the next 10 or 20 years, you're going to buy a remote, a controller, and you're going to log into the internet and play on the internet, right? Wouldn't we say that?
Mo, what are your thoughts on this thing?
Yeah, that's already happening. I mean, to me, it looks like they're overpaying, but we do see this. When there's acquisitions, there's a lot of big, especially when you see these big ones, they overpay. And it doesn't make sense. I mean, Call of Duty is one of the biggest games out there, and Xbox is one of the biggest platforms out there, and if you just take it, and I mean, they don't even only have that. They have like Candy Crush. There's so many different games. I think it makes sense what they're doing.
Yeah,
I was very surprised though.
Yeah, so let's go to Microsoft real quick and see how much cash they have. So let's go to the balance sheet. Guys, their total current assets is $175 billion. So they're probably looking at going, listen, we have $175 billion, and our free cash flow every year is, look at their free cash flow, Microsoft's free cash flow. $60 billion last year. So they're probably thinking, like, listen, for 13, 14 months of free cash flow, we can get a list of games that we're going to own the rights to. Yeah. They're probably thinking to themselves, yeah, let's do this.
And they're games that are big sellers too.
Yeah.
I mean, they're not going to skip a beat. They're just going to, I mean, when Call of Duty comes out.
Now imagine Microsoft says to PlayStation, yeah, you don't get Call of Duty anymore. I don't know if that's possible. Is that allowed? Imagine Microsoft said to PlayStation, yeah, you're not getting Call of Duty anymore. If you want to play Call of Duty, you got to buy an Xbox.
I think it's perfectly, I mean, that's
Holy
what
cow.
MLB, the only game that I play is MLB, and MLB The Show got the rights to Sony, and they said, you want to play MLB The Show? It's Sony. That's it.
I mean, I don't know anybody, everybody I know who plays Call of Duty plays it on a PlayStation. So imagine Microsoft just said, you're fired. Like, you're not going to buy, you have to buy and my guess is there's going to be a subscription model for this. They probably run the numbers saying, listen, we have all these people, blah, 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 blah. We charge $20 a month. There's 30 million users. That alone is 600 million. They just do the math. And now granted, do I think companies overpay? Yes, companies tend to overpay. But Microsoft has $175 billion in cash lying around. They're probably sitting there saying, all right, business is looking good. Next year, we're going to have $70 billion in free cash flow. We pay for itself in we buy it in 1 year.
I bet I mean, of course, you don't just decide you're going to buy a company overnight, but I bet they were very happy to see Activision Blizzard get hit like they did with those sexual allegation charges.
Oh, for sure.
And they saw it and they were like, hell yeah, now let's try to get this together quick.
If these numbers speak to you, if you don't have a process out there, you can join a community. You can have these financials, a stock analyzer tool, and access to them all on your phone. Paul, tell them how they get the software.
So guys, we created a software because our users were sitting there saying, how do we analyze stocks without waiting for you to make a video? There are 10,000 stocks out there. They wanted to analyze them themselves. So we made our software. We spent hundreds of thousands of dollars. You get all of this. You get everything you've seen so far, the 8 pillars tool, retirement calculator, stock analyzer, 8-pillar portfolio, exclusive video content. Every single day we post 1 to 3 videos made by us only for our users. You get all of this. You get everything on the phone app, like Seth said. But most importantly, if you feel alone, you get the community of over 6,000 people who use the software every single day to talk about your investment ideas. Because you might be the only one of your friends who believes these thoughts. You can't talk to them. You go into the chat right here in the top right corner or on your mobile phone and talk every day about every investment idea you have. This is all for only $1 per day. Whatever price you pay, you are locked in forever. $1 per day gets you everything here. 30 years of financial data. This is a no-brainer, guys. Our competitors are $199 to $500 a month. $1 per day gets you this software. Go sign up now. 2 ways to sign up, everythingmoney.com or Patreon. The benefits of everythingmoney.com is you don't pay sales tax yet because we're not big enough. Sign up $1 per day.
If you're looking to trade either of these companies at a quicker pace, you can follow Mo's rules. He'll tell you right now, Mo, you always say you wait for all that pre-market nonsense to clear out. And sure enough, had I bought this morning around 93 pre-market, I'm already down to $84 on Activision. So give us your thoughts on these very red engulfing candlesticks going downward.
The high today is at open was $86.90. So $86.90, and now the stock price is at $84. So I like to say, when let everything calm down. Here's the move. This is a 15-minute chart. This is the move you saw this morning. This was that 36% move. And right when it opened, look, you're already starting to trend down. You're starting to trend down on your stochastic. So when events like this happen, just take it easy. You don't need to get in and get all excited and just buy things and just hope and pray that they go up. There is a systematic process to this. So what I would tell you to do, and what I'm looking at doing, is letting this calm down. Let's see how far this comes down. I was talking to Paul about it earlier. There could be an arbitrage play, like Seth said. This could go, if the deal closes, it's going to $95. So if you want to get in on it, just follow this. Don't be buying up here. You might as well buy it down here if you can. So there are rules to this. If you want to learn these rules, come and join me in the Bid and Ask Nation. You get access to the Trading 101 series, which is all of the rules that you do need to learn how to trade on a 15-minute chart, to understand when these crazy gaps up happen, what do you do in that situation? You get the Employed Trader series, which is 6 stocks that I go through every single day and update you on and do the legwork for you. You get my exclusive Saturday seminars, 1 Saturday a month. I do an open Q&A session to only the Bid and Ask Nation. And you get access to the chat community of 1,000+ people. Come and join us.
That's our take on Microsoft buying Activision. If you have been requesting Activision all year, congrats. I guess someone out there really liked them, including Microsoft. So for all you Activision fans, I guess it's a happy day for you.
Oh, absolutely.
You think? Yeah.
And by the way, just to let you guys know, Sony's down 5% already today.
They're frowning on Sony already.
Yeah, I mean, we could think about it. They're going to sit there and say, hey, does this mean that Sony's... There's going to be all the... I don't know if it's right or not, but if I'm Microsoft, that's what I'm thinking to myself. Like, how do we dominate the game? Because PlayStation has dominated Xbox. Would we not agree?
Yes, they have.
Yeah, so... But Call of Duty's been a big one. I don't know. I think to myself, if I'm Microsoft, yeah, I'll pay $10 billion more, $15 billion more than I think it's worth, because I'll be able to hurt Sony's long-term on the PlayStation. Who knows?
It is funny how these companies can make these brands like Mario, Halo, that can just go on for 20, 30 years. They just keep making the games.
Mario is 1987.
Amazing. All right, that's our take. Final thumbs up. Keep watching more videos. There's a language you got to learn, and we will walk you through the process. See you next video.